All right, guys, let's get straight down to business. This is from January, beginning of this year, to March. Total realized gain down 12,734. It was 20 grand. I made it back. Now, there's a reason I'm going to be showing you this video. There's a lot to learn about option trading, hedging, and options and literally strategies that I want to highlight. Now, before I get into this, I'm showing you guys this for a reason. I just showed you guys a play where I turned $20 into 700 in about an hour, and you could, you see these gains, and I have another video, you guys, where I'm putting out, and again, I'm gonna hear, oh, you suck at trading, this and that. Why would I listen to you if this and that? You guys have to realize I'm trying to be transparent with this. I'm trying to show you, and quite frankly, this was a hedge. I was using my options to hedge a longer term, literal owning shares of Facebook, talking millions of dollars. So there's stuff to understand with that. And I want people to see the dangers of certain strategies. You'll see shorter durations and both longer durations, I got crushed on them. So you have to learn how to do this. So again, like this video if you guys support this idea, if you like the content, again, and if you dislike it, unfortunately, YouTube will not recommend you any of the learning content. I want to show you guys this so that you could see, quite frankly, I see YouTubers only post and finance the gains and all this stuff. I'm going to show you some gains. I'm going to show you losses at the end of the day. I want you guys to understand the reasoning behind it. I'm not selling you a course. I'm not selling anything. I guess all I'm selling you is to come to the live stream, watch us trade live, and contribute. If you think the strategy, I'm an idiot, this and that, please come to the chat and help everybody out then, if that's how you feel. If you feel like you could learn something from this, awesome. I will give you, and everybody else will give you information. So that's why I'm doing this. I want you guys to be mature about this. I've noticed the financial community, it's not always about pointing fingers, good or bad. If a lot of people have an ego when it comes to trading. So I want you guys to, I guess the culture has to be a little bit different. If you guys want people to share stuff like this, you got to be a little bit more understanding. And I'm saying that for the new people watching, my OG people in the cult, what's up. I'm glad to share this with you. I'm sure this is going to click and connect for a lot of you guys. So I'm going to show you guys this, and we'll start first with really the main thing. You'll notice that, and well, why did I do this, right? You'll see the open dates. You'll see when I closed them. A lot were short term. I even have some that are, the March contracts. They were a little longer, but it was still the same issue. Quite frankly, I did really go only short term. And now here's the thing you have to understand. You're going to get crushed on the short term. But now going to the stock itself, Facebook, during that time, why did I do what I did? It was going down, and why did I take such an aggressive position around December and January? You see where the stock was at. You see how it responded. Here's the biggest key to it. I was down from this literally over 7 figures on my Facebook position. I wanted, it was getting to the point where if it did go below certain levels I had, I needed to have an insurance policy. So that's where I was there. And this was a lesson I gave on stream that a lot of people don't understand when it comes to trading options. An option contract is a hedge. A hedge is insurance. So if you guys aren't familiar, literally, if I own millions of dollars of Facebook, well, we'll keep it simple, $1 million, and I put down 12 or 20,000, that's about what? 1 to 2% of the total amount, the whole concept is if those hit that 1-2% of my overall position, if I'm wrong about holding Facebook and I'm right on those positions, the stock would drop and I would make money in the short term. I could have probably turned that 12,000 to about 150, 200 grand. And with that would have at least minimized the impact of the loss on the position. And that's how you use insurance. I brought this up during the stream. I'll use a clip, but that's where people forget with insurance. So from here, you could understand the effects of why these short-term contracts are bad, even long-term, even all of you in general. I'm going to show you guys the difference because some people are like, well, if you felt that way, why didn't you just buy a long-term contract and hold it? That's not how option works. And this is why I'm making this video, to show you guys options isn't just something you buy and you hold like a stock. It's not there. I own stock and I long-term invest heavily. The point you have to realize, it is for short durations. All contracts are designed to go to zero. It's like insurance. You guys have your insurance for your car. And this is the point I made during the stream. And make sure you guys check that out. We're streaming live. So a lot of people saw me do this live. But Every day, Monday through Friday, 30 minutes before open. But you pay for insurance every month on your car. A lot of you guys, hopefully, and thank God, if not, you don't use your insurance, meaning you didn't get in an accident. So if you spend $100 on your car a month, you're spending $1,200 a year to protect the value of the car, the liability that could arise from an accident, anything. Literally, that is a hedge on your purchase of the vehicle, and the government requires it because that's a hedge on your stupidity. So you buy that car, you pay for the premium not expecting to use it, because the better outcome is what? You keep your car, you don't get in an accident, you don't have to deal with that. So this is where people are making a huge mistake in options, because they're buying insurance premiums thinking that they could hold them and that they're going to gain the same way and profit for them as if it was a long-term stock. That is not correct. It's literally option. It's called an option premium. It's called your insurance premium. You're paying something you're paying a premium, something above value to protect. And now option is the same case. It's used in the event it goes to a certain price or something happens. So this is why I want you guys to understand, because the big problem I saw people doing is they have really small accounts and they're spending a lot of money on options. That's why when you guys see these plays I'm doing, like, these Microsoft, I bought these Microsofts for 2 cents. It's a $2 insurance policy on the call side. And we'll talk about how it works for calls. And I sold them for 27 cents, And then these are weekly options. You guys could go check out the video I made on it. But hopefully you are understanding the point here. Taking these weekly it's supposed to spend a small amount of money. So I want to make sure a lot of you guys aren't trying to throw $1,000, $2,000, $4,000, $5,000 into these contracts unless you have a real reason. Again, when you see me dropping, let's see, what was the biggest open net amount I put? Even then, I only put $2,000. That's still a lot of money in different positions over different dates, but you have to understand I'm protecting $1 million vehicle. So if you guys are doing it to speculate, it gets dangerous if you're not understanding the concept and relative to your account. And this is what I brought up. If you guys had a $10,000 car, would you pay $4,000 a year in insurance premium? It would be ridiculous. Again, it has to make sense relatively. And that's how you could figure out option pricing. If you guys, a lot of people ask me, how do you find mispriced options? People laugh at me and say mispriced options don't exist. Well, you're telling me you can't find, an insurance premium is not priced. It's literally the market not pricing in the risk, or vice versa, overpricing and underpricing in the event. And now think about what makes a contract, your insurance premium, go up. If you're a bad driver, if it's more likely you're going to get in an area, they want your zip code, they want to know where you're driving it, how many miles you're driving it. These are literally the exact same factors when analyzing an option. So I want you guys to really understand that and be cautious. And now, what is another mistake I made on this is that I did buy again. So Facebook was crashing. I should have waited, but with Facebook crashing during that time, insurance premiums were higher, right? The stock is already down, and they're saying, if you want to, it's like getting insurance on a house where there's a fire and you're trying to get fire insurance, or a lot of things are going bad and you're trying to get the insurance premium there. It makes total sense, right? If you're buying insurance after an event, or when it's really risky, or again, the event, if you're buying crash insurance and it's already getting crashed, there's going to be a higher premium, and vice versa. So I should have went there smaller. I did go a lot of weeklies. You could see me open dates, I was buying 2 weeks out on a $2,000 weekly, again, and that was factoring in what was going on. And there's different calls and puts, but as you see, most of them were literally puts, and I would get some calls here and there to hedge. And the biggest thing I got to realize is I was panicking a little bit just because I was thinking about my underlying position, and I was paying higher contract prices, which I normally do not like to do. And that's the same thing, because at the end of the day, this is the point I'm making. You could spend $400 on a premium versus $40. If the crash doesn't happen, both of those premiums expire worthless. So you have to understand that. And I could have been a lot more patient and waited for the bounce to get some more. And again, I thought it would dissipate faster. Even when I averaged down on some of these throughout, the premium was still there. It had that jump up, and boom, it got wiped away. So there's that. Now, the next thing I want you guys, though, because here's the next thing automatically. If I believed and I wanted to insure Facebook how I wanted to, well, why didn't I just go get like June contracts or like 1 year out? Let's go 1 year out, right? And let's see if I wanted like a 130 contract or anything, they just went up, but it would have been the same scenario. If I got them, December 28th around any of these times, I would have been paying $1,100 a contract to 2,000, and they would have been down 80%. So on that, $12 or $20,000, that would have, I still would have had like $3,000 left, which would have been better than nothing and having them expire. But at the same time, for me, why did I get the shorter duration? It would have paid out more. So these ones, even I would have paid a lot more money, they still depreciated a year later. So again, you can't just hold it. If you're like, oh, I know this is going to happen, I think the crash is going to happen. Oh, come on, my friends. Wall Street is smarter than that. They're not going to just let you throw a put in and hold it. That's where a lot of people mess up on this, because it is about understanding timing. And this is what makes the market difficulty and risk reward, because if I bought these and it still dropped to 130, I would have probably gotten the money, but with the premium being higher, I would have been getting less contracts. I couldn't protect the total amount I had, and it wouldn't have made me as much money, because the longer term contracts, they gain less value versus the shorter term, but they also lose less value. So at least these didn't expire, but they still drop. So you could go all the way through the chain, and you could see on anyone with time, even though Facebook's dropping again, it still lost premium, because this heightened the premium because of the accident, and then it started to drop. So either position I would have lost if I made those entries and I waited and I bought during high volatility. And as you see, I tell you guys, not when I'm trading, I try not to buy like that. But what was my big problem with Facebook? I needed to protect something on the underlying asset. So that's what I want to make sure you guys are understanding, and how really you have to know the strategy of what you want. And then what I mean by strategy is your financial goals. This is where everybody's missing the point. This is why watching videos with people making money, losing money, criticizing, all that, none of it matters. It's not about who gets to the finish line first. You need to accomplish something where what you do in trading and investing, you need to have your own financial goals, and you should be making sure your investing is meeting those needs. It's not who crosses the finish line first, who makes the biggest amount of money here and there. It's to account for your financial needs. A lot of people could say anything about this trade or this and that. At the end of the day, I have my financial needs are met, my financial goals with investing. I have enough money to lose $20,000 here, $20,000 there, make money. I could still pay for all of my houses. I have money coming in. I could sit down and babble on YouTube all day for 6 hours. You guys get the point of what I'm saying. So I want to make sure you guys are understanding your needs and are able to meet them. That's why don't let the time dictate it. That's why time forced me to buy these, because I didn't have protection and I waited too long. When Facebook was dropping, I figured I could hold it through, but as it started to get worse and worse and more news and stuff like that, that's when it really started to kick in. And now it went back up, and this would be another, I might get more insurance here now that it's substantially cheaper, even for a year out, because now it's like me going right back to October, and I could get the same insurance plan for like 90% off. So that's how you do it. And again, when I'm playing with these big amounts, people, you got to understand spacing. This is averaging down, and on a bigger level, a lot of people are so quick to say loss or this and that, when you got to, it's strategy and timing and patience. If I do give up now, yeah, it is a loss, but looking at it now, there is that clear opportunity for me to scoop these up at a much cheaper price and get that insurance and see how it plays down, because now the same risks, I believe, are still on the table, and now the insurance is cheaper. So you could take a bit from that. But that's pretty much it. Hopefully you guys learn from this. Honestly, I'm just highlighting the loss, showing you guys what I lost, showing you what I learned from it, and hopefully you could take out the understanding of insurance and options, and then also literally longer term contracts and short term contracts. If you guys even, I think a good homework lesson, go through all of the puts on Facebook from March 22nd to all the way a year or two out, because even on the 2021s, how are those looking? It's the same exact thing, So you guys have to notice the pattern with this. And again, this capitulating, this could start to be underpricing if we could really confirm the risks are there. And a good thing to look at with these contracts, it's not like Facebook isn't dropping. It's not like bad news hasn't came out on Facebook recently. So this is where it gets really, really interesting. Again, we have a different market environment, and now the puts are becoming a lot more attractive because a lot of it's been washed out. And you could even see that with the VIX. So hopefully it's a good learning lesson for you guys. Hopefully you could take something from it, understand, this is option trading is way more riskier. The weekly options are risky. You will lose your money. When you see me make money, I'm getting lucky, and I understand that. I've turned $2,000 into $250,000 in a day, And that happened once in the last like 4 years. It's few and far between, but for me, I've been in the game for 12 years, and you guys see how I'm literally involved with it, and that's what I encourage you guys to do. Encourage you to be smart with financial management, fiscal management, and I encourage you guys to never give up, but also to have a real financial plan and not worry about the time and be more patient. And you can see what happens when I'm not impatient, when I let other emotions get in there, when I bring in other factors. But again, a quarter goes by, you get a brand new set of opportunities. It's for those who want to take it. So I love you guys. Hopefully that helps. Drop a thumbs up on the video. Give me some feedback if you think I'm an idiot, smart, whatever. But like I said, come to the live stream and come correct me. YouTube.com/the stock market. All the links are in the below in the description, or you can click up to the top right and you will see everything. But that's pretty much it. Love you guys. Peace.